Okay, cool. Wait a few minutes and we'll get going here. Okay, let's go ahead and get started. All right, so today's webinar, we're going to be talking about the buying and selling logistics and what are your options that you have as you are a homeowner and you're looking to trade up or trade down. Now, this could be several different things. It could be trading up as in you need a bigger home. It could be you are selling to move to another area. It could be many people are empty nesters now. So it doesn't make much sense for them to have such a big house, especially with so many different of the propositions that are in place to allow you to keep your property tax basis. And why not cash out on the significant amount of equity that you have so that you can then redistribute it to your family and your children. So we will continue to see that happening over the next decade, regardless of what happens with the market. So let's jump right into it. Let's talk a little bit about myself, and then let's talk about the general market, and then we'll talk about all the options that are available. So a little bit about me. I'm born and raised in the Bay Area, lived here my entire life. My first decade, I was in software sales. Last year, I was still a solo agent. I helped 58 clients for over 73 million last year, which is the top 1% in the entire country. And this year, I've been growing a team, and I continue to hire people. So if you know of any good agents that are looking to be part of a team as we go through the next year, I would love to connect with them as we are growing still very rapidly. This year so far, I've helped 72 clients with their moves. If you guys have any questions, whether you're watching this on the live stream or you're watching it on the recorded version afterwards, feel free to message me at any time, or you can leave it in the comments as this is posted on YouTube. Happy to address those separately. So let's talk about the market, just a high level. I go through this stuff every week, so you can tune into my other videos on YouTube when it comes to more of a deeper dive. But as a quick summary, as what has been going on, right? Prices have been declining by about 15 to 20% since the peak of things, which is really about the April and May timeframe is when things started to shift downwards. So in general, as an aggregate, there are fewer buyers in the market, hence why prices have been declining. Due to a lot of people giving up, it could be a combination of reasons. It could be the recent layoffs. It could be higher interest rates. It could be their assets in general have been devalued, and so they're maybe underwater with some assets, or they're just very, very scared. Those are all reasons that people don't want to buy. Make no mistake, still there are plenty of people buying. But what does that mean? It does mean that the people that are that would have been buyers, they still have all that money. Like if they have the money to be able to buy a home, they clearly have more than enough money to pay for whatever the rental figures are, because you need X amount of down payment, right? So what has happened over since April, May is rent has continued to increase and has done very, very well if you're a landlord or you were owning apartments. And so what happened was all that frenzy that was actually buying a home went into renting a house, which is pretty unfortunate, but wild at the same time. So that's what happened previously. Now, moving forward, though, the challenge that we have with higher interest rates is that sellers are also a little bit more hesitant, to make their moves. So you don't actually see this massive prop up of tons of homes flooded on the market, and that it's really, really easy to buy, right? Make no mistake, it's also still somewhat challenging of the number of homes that come on the market. Because think about this, if you were an owner and you had a rate that was locked, which is a majority of people, of 3 or 4%, and now rates are higher, let's say 5.5 or 6%, then there are less people that will be wanting to make the move, right? And so what happens is that we still have these inventory challenges. It's not as bad as before, so it still has gone up, but you still have these challenges. It's not like you have infinite homes that you can choose from, and now it's a field day for everybody. So those are the things that people have to be mindful of, and which is really relevant, especially to this conversation of what are the options that you actually have when you want to do a trade up, you want to move somewhere else, or you want to trade down. Let's go over them, right? Because there's really 4 main things, high level, right? Number 1, you can sell your home first. So that's the most common route. You sell your home first, and then there's a few ways of what you can do to try to prolong the time you're there to maybe buy the next one, which is you can ask for what they call as a rent back. So what is a rent back, you may ask? A rent back is the idea where you are selling your home and you're in contract to close on your home. And usually closing takes, let's say, 30 days. So at the day 30, the money transfers and the ownership transfers to the other side. What a rent back is in the Bay Area or in California, you can get up to a 2-month rent back, and that's all within permission of the loan aspects of getting a loan from the lender. And so this then allows you to stay in that home for extra 2 months. And so what are the pros of that? The pros of that is you are able to stay in the place and then have one less move to make. During that time, you have the money now. You actually have the money to then be able to start making offers that are strong, just as if you had no home to begin with. Thus, those are the really pros of it. The con of it is those are really dictated by the buyer. And because there are less buyers out there, the ability to get a rent back is a lot less than when the market was really hot, right? Because this is a term like anything else. I mean, the buyer wants to get into the home as soon as possible too, because as soon as they own it, they're already paying the mortgages and property tax, right? So they want to get into the home as soon as possible. And so because of that, and because there's just less, it's just a completely different market that's favoring the sellers less now. It's more balanced. That's not a guarantee as it was before. Before, the seller can ask for your newborn and you'll give it to them, right? So it's very, very different back then. Now, that's kind of one option. The other option, which some people do, is they sell the home and then they find a place to rent for a bit. Now, they may move back in with like in-laws. They may move back with friends and family. They may live in a hotel for weeks at a time. They may go find an Airbnb. There are many ways to do it, but that is another common route, right? So that's a simple route because you're selling it, you get your money, then you can start making offers and making bids for a home. Your next option, which is you're making an offer on a home subject to the sale of your home. So when you have same thing as an idea, it's a term. Now, this option is much more available now, which at this time of this shoot, it's in mid-November than it was before. Why? Because the buyer side is stronger now. And because the buyer side is stronger, there is more ability to make these types of contingencies. Now, we do have to be mindful of, though, there's a difference of an offer of a home subject to sale for one that's already on the market versus one that you don't have on the market. And why is that different? Think about this logistically. Let's work backwards on a sale on a home that's for sale that you're about to close on. If you work backwards, right, it takes about 30 days to close. Now, it doesn't sell instantly, right? Especially in a slower market, things aren't instant. So it may take 2 to 3 weeks, depending on the condition of your home, to actually get in contract. And keep in mind, this assumes that there's no contingencies, there's no issues, there's no backing out. So if you do some quick math, even if you have the home on the market today, it will take you potentially about 50 days to close. So the issue with the offer on a home subject to the sale of your home when you don't even have your home on the market is that's assuming that everything was ready to go today. You still got to do some prep work, right? You got to do some photos, videos, market it, do some mailers, have the agent start calling all the neighbors around, right? There's all even more above it. So maybe that's an extra seven to 14 days before. So the strategy of making an offer on a home subject to sale of your home is viable, but you probably want to have your home on the market, and even better if it's in contract, because it gives the other side more confidence that it's just a matter of time to close than the uncertainty that you don't even know when yours will close. And because keep in mind, on the other side, they have to lock up their home and not be able to accept other offers until this gets resolved, right? So you do have the ability to do it, but I would say if you're going to do that, you probably want to sell your home first, as in have it on the market, and then you can start making offers with this. I don't think there's any issues in this market for that. But if you haven't even put your home on the market, then that's where it becomes more of a very big logistical risk for the other side to accept, right? Number three, now not everybody has this ability, but certainly a lot of people will have this ability. We're in the Bay Area after all. Some people can buy first and then sell the home after. The key about this, if you think about it from a lender's perspective, there will be some overlap where you actually will be holding on to two homes at the same time. And so on the lender's side, they need to review that and write that in and make sure you have enough of the income for that. Now, different lenders can factor different ways. So there are different lenders that can have a higher debt to income ratio, right? Because this home is all debt. So there are options there that are available. But you need that kind of income. And you also need the liquidity, right? Like you're not buying with 0% down, at least most of us are not. And if your minimum was 10% or 20%, you need to have that kind of liquidity to be able to put that down and buy the home. So it is a viable option. A lot of people do this, but for many, most of your equity is tied to your home, or your income may not be able to support this much bigger purchase. And then lastly, what we're going to discuss today, and that's a part of the theme of today, is there are tools available if you don't want to go through 1, 2, and 3. And what is that? It's using a bridge-like product. And so what is a bridge-like product? That's what we're going to talk about. Homelight. So Homelight is a player in this industry that is creating this financial instrument that will allow you to buy the next home first, because they would already underwrite you and assume that as soon as you buy the next one, we're going to sell your home right after. And there'll be different ways that they can ensure that will happen. Otherwise, there will be different costs associated with it. But let's talk about what are the concerns, as you can see. What are the biggest challenges that people have? The number one concern that many people have, if I did a poll, is the lack of assurance that they're going to find a replacement home, right? And so that's always a concern. Like they're wanting to sell, but they don't want to be quote unquote homeless. In reality, not really homeless, but they don't want to be homeless. But there's a mentality of that, right? There's also a lot of equity and capital tied to the primary home. That's a challenge for many people. That's a challenge for many. And lastly, they don't want to have the feeling of being rushed if they have to sell first, right? Because even if you're fortunate to have a rent back, it's still a 2-month period, right? So you need to close within that 2 months so that it does minimize the amount of moves. Those are the common reasons, and that's why this product even exists. So how does this Homelight trade-in actually work? So first and foremost, just like any bank, Homelight is a company, and they're a venture-backed company. They're actually the company that owns and bought Disclosures.io, which is what many of us use to even review paperwork of a home. So that company will do a underwriting process, like a pre-approval, but except they're going to be doing a pre-approval not of just your finances, which they absolutely have to do as a lender, but they also will do a pre-approval of the value of your home and how much equity you have in your home, right? If you have no equity in your home, they're not going to be able to do it because your margin was so thin, it's not worth them making the bet and the risk. There's just no safety margin for them. But if it was like you owned it for a few years, you probably have a decent amount of equity in place, and that's why they need to review that. So they will be working with myself as an agent to review your options and to say, okay, well, you have a good amount of equity. This is your income. if we do the math, and if you sold equity and move that equity into the next home, you can buy up to $1 million or $2 million or whatever it may be. That's what they do first, right? So, but there's a process that happens. It's not as fast as a lender because it's not just all paperwork. There's questionnaires to be filled out. They will send a home inspector to go out to do a home inspection. They may or may not order an appraisal. They will work with me to get comparables with a valuation, right? So as you can see, there are several different things that they need to do. So it's more steps than just getting a loan. Now, the question that you may ask is there fees for this? There's actually no fees for this. They actually take in this amount, whether you're going to be working with them or not. So it's a very, very risk-free from that perspective, right? And so they're making the bet that if you're going to go through this effort that you want to buy a place. So that's part of it. I don't know how long that section will last because it is clearly capital that they have to invest up front, whether this moves forward or not, but it has been in the past. From there, they'll run the numbers. They'll say you have this much equity. We can substitute. You can have this much in. You can buy up to X. So they'll provide you, just like a bank, a pre-approval loan amount. And the beauty of this is that you are then making offers because they already did all this work in advance. You're making offers like you can make it non-contingent because they already underwrote you of what you can buy up to. There's no issues of you getting this kind of loan. And that's one of the benefits that you're making now stronger offers. While there's less buyers out there, it's not like no home sale. So if a home is nice and there's multiple people liking it, this for sale by contingency aspect is not going to be effective enough to win that many times. And so you do want to clean up your situation as much as possible. Now, then you're asking, okay, I get my offer accepted like normal. What happens afterwards? Like, how does Homelight protect themselves? Like, how do they just give you money and not worry about it? What happens afterwards is that Homelight will actually acquire your property a few days before you actually close on your next home. And they would already have a price agreed upon. Now, you may be asking next logically, okay, well, what if it was a really low number? Are they just giving me a low ball? No, they're giving you a conservative number for their underwriting. And so what happens is that they give you a number and you'll agree to that number. And then when you actually sell your house on the market, whatever that spread is, that will be compensated back to you. But they do need to have this intermediary arm to do the exchange, to be able to hold on to it, because they've already gave you all this money and helped you fund your down payment, also already gave you the loan. So they need to hold on to something, which is an asset, as they make this move, right? And then what happens is you move into a new place. We do whatever we need to do on your previous home, whether we need to clean it, remodel it, do staging, photos, videos, like all the standard things that are now available to be done because now it's open. And then I will then help you sell that home like we would normally do. And then that's complete. So if you have any questions, leave it in the comments below, or feel free to, I'll take a quick pause for the people that are tuning in live for this, if there's any questions about this, but that's some of the logistics for that. All right, no questions. Let's move forward. Okay, so here is the timeline to expect. So it gives you an idea of just the logistics, but it's a same summary. So you'll be able to take a snapshot of it, but high level, as you can see, week 1, it's really the process getting pre-approved. 2 and 3 is you get your offer accepted, you're under contract. You then begin the trade-in process, which is what I brought up. You then do the prep work that you may need for your current home, and then we put it on the market. So, but a high level covers the exact same things that I shared, but just gives you broken down what the options are. Next, let's talk about the benefits of the Homelight trade-in. So the benefits, as you can see, is that you have the ability to move when you're ready because you're buying the next one first. So you don't have the sense of feeling homeless because you already have a place that you're moving into. They actually do have an offer, a solution to make it all cash. So there is an extra fee for that. But if you want to make it really competitive and also try to buy for even lower, then it may be a good move to make, right? Because all cash, there's a fee for it, but generally all cash is worth at least 2 to 4% of the price, because it can close very quickly. It can close in less than 2 weeks. And so there is value for all cash. So if you want to make your offer into an all cash, they can easily allow you to do that. Homes that are then sold with Homelight using this process tend to actually sell for 6% more, and they ran stats on this. I've actually had another example myself where it sold for way more than 6%. So you may be asking, like, why? How does it sell for more? I mean, think about this. If you're selling a home and you're living in the home, there's so many things that you couldn't have done to make it a lot nicer. Could have been remodeling work, could have been repainting, could have been staging the home, could have been just the lack of easy access for people to get in and out of the home because you're there, right? The photos that we would have been able to do, the videos we would have been able to do, like these are all elements that would have prevented somebody for not being able to achieve truly the max, because you're not able to set up the environment to be like the best possible that it could be, right? So those are all important elements when it comes to this. So that is that. And then last but not least, you're able to sell your home and move into your new home pretty quickly. Now, what are the negatives? There's always cons of this. It's not for free. They're not a nonprofit, right? So what are the negatives? The negatives is that this is the bridge, right? Literally the bridge, the middleman. So you will be owing the company fees. There's a way that they charge of things. So what they charge is 1.5% of the value of your sold home. So the value of the home that you previously had. And if it's longer than 2 months, there's obviously carrying costs. So that becomes a factor, because 0.5% more. So at the end of the day, one has to just weigh the balance of, is this how much do you value the potential upside by having a vacant and stage, by also being doing the renovations? How much do you value the lack of several different moves that you need to make? How much do you value the aspect of not being homeless, right? Those are all factors as people make the decision. And so it's a viable solution. And I'm glad at least it's there, because a lot of people could be making their moves if they knew about this, which many do not know about. Here's a wonderful review that I had from one of my clients that did this program themselves. I helped them buy a new single family home, and we sold their townhome. And because of the ability, as I mentioned, a live ability, we did some touch-up work. They couldn't do that, and that's reasonable. They had a family living there, and they're always using their home, especially a lot of people are work from home all the time. We were able to stage it because we were able to declutter and empty it out, stage it, do professional photos and videos, and then we sold it for a record amount at that time. So these are the general feedback, right, that I just went over of the description. So some tips that I would have for anybody that's doing the consideration for buying and selling simultaneously. Now you know all your options. So can you buy a home first without the need to sell? So then just do that. That's the easiest option. If you can't, you will need to either now choose between some of these different options, right? You can use a Homelight trade-in. You can do a contingency to sell. Hopefully, I would have already listed your home, so it at least shortens that contingency. Or last but not least, you can also sell first, then buy after. Those are all ways that you have available. Either way, my team will be able to support you and go over these options together. I have direct contacts with these companies at Homelight. There's preferred people that I work with. So, but at least now you know your options, and you know, like, all of these are very, very viable. Happy to have a quick Q&A, but at the end of the day, I'm sure every situation is different. So if you have any questions, call or text me below at 408-547-4590. You can follow me on the different social media of YouTube, which many of you are watching, or at Bay Area Tech Realtor on Instagram. I'll take a pause for a few seconds or a few minutes here, and then we will wrap up. All right. If there's no questions, we will wrap up. Enjoy the evening. Let me know if there's any questions, or connect with me, or call or text, and we can go over a situation for yourself